and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News End channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Bitcoin miners shift to AI and chip sales amid having revenue collapse. Will it be enough? Bybit faces 3-month ban in South Korea. Is this the end for the country's top exchange? U.S. authorities seize $31 million in crypto from uranium finance hack. But where's the rest? Crypto market plunges into extreme fear as Trump confirms 25% tariffs on Canada and Mexico. Crypto in crisis. Bybit rushes to repay Bitget's 40,000 ETH loan after devastating $1.4 billion hack. Bitcoin miners shift to AI and chip sales amid having revenue collapse. Will it be enough? Bitcoin mining crisis. Miners turn to AI and chip sales to survive post-halving revenue drop. Bitcoin miners are facing a major profitability crisis following the April 2024 halving, which slashed BTC mining rewards in half. With mining margins under extreme pressure, companies are desperately pivoting toward artificial intelligence, AI, computing, and high-performance chip sales to stay afloat. Miners' earnings under the microscope. With 4 major Bitcoin mining companies, Riot Platforms, Riot, Bitdeer, B2DR, Marathon Digital, Mara, and Core Scientific, CORZ, set to release Q4 earnings between February 24th to 26th, analysts are closely watching their non-core revenue streams. The April 2024 having reduced mining rewards from 6.25 BTC per block to just 3.125 BTC, making it significantly harder for miners to stay profitable. While November earnings came in weaker than expected, analysts are now optimistic that Bitcoin miners could recover by leveraging alternative revenue streams, including AI computing and ASIC microchip sales. Miners bet on AI and chips to offset losses. Analysts at H.C. Wainwright & Co. have highlighted Bitdeer's strong demand for its first internally developed ASIC microchip, calling it a potential game-changer for the chip market. Bitdeer's stock rating remains a buy, with a raised price target of $18, a major jump from its current $13 per share. Meanwhile, Riot Platforms has halted its planned BTC mining expansions to explore AI and high-performance computing, HPC, services. Riot's stock is also rated a buy, with a $17 price target, compared to its current $10 per share valuation. Miners scramble to cut costs and scale operations. To survive, Bitcoin miners are aggressively scaling infrastructure, cutting costs, and securing energy supplies. Bitdeer plans to spend $100 million on a new power plant and data center in Alberta, Canada. Marathon Digital is diversifying its mining operations to lower costs and increase efficiency. Riot Platforms faces activist investor pressure from Starboard Value to shift into AI-driven computing. The AI Bitcoin mining synergy, a lifeline for the industry? With AI demand for computational power skyrocketing, Bitcoin miners could become crucial energy providers for AI-driven data centers. According to VanEck's Matthew Siegel, AI companies need energy, and Bitcoin miners have it. Existing Bitcoin miners are uniquely equipped to support AI and high-performance computing, HPC, immediately. Riot has already responded to investor pressure, announcing a board shakeup and formal AI expansion plans in February 2025. Will Bitcoin miners survive the halving crisis, or is a major shakeout inevitable? Upbit faces 3-month ban in South Korea. Is this the end for the country's top exchange? South Korea shocks crypto markets with harsh sanctions against Upbit. The South Korean cryptocurrency industry is in turmoil after regulators imposed a 3-month ban on new customer transactions for Upbit, the country's largest crypto exchange. The Financial Intelligence Unit, FIU, has cracked down hard, citing violations of anti-money laundering, AML, policies, and the consequences could be devastating. Regulators hit Upbit with heavy sanctions. In a shocking move, South Korea's FIU announced on February 25 that Upbit will be restricted from processing crypto deposits and withdrawals for new customers until the ban expires in May 2025. The FIU claims that Upbit facilitated transactions with unregistered crypto asset service providers, CASPs, a serious violation of South Korean financial laws. The exchange quickly addressed the situation, apologizing to its users and stating that the sanctions may be revised depending on regulatory discussions. Upbit clarified, the sanctions imposed this time may be subject to change through procedures in accordance with relevant regulations, and if the effect of the relevant measures is suspended or terminated, new members will also be able to use Upbit's services without restrictions. Is this just the beginning? South Korean regulators tighten the noose. Upbit's regulatory troubles date back to November 2024, when the FIU alleged that the exchange had committed 600,000 Know Your Customer (KYC) violations. Authorities warned in January 2025 that the exchange could face punitive measures, a warning that has now materialized. The crackdown on Upbit could be a warning sign for the entire South Korean crypto industry, as regulators are showing zero tolerance for compliance breaches. With the FIU aggressively enforcing AML policies, other exchanges might be next in line for similar sanctions. Upbit's trading volume plummets 70%. Can it survive? The fallout has been catastrophic for Upbit. Once one of the world's largest crypto exchanges, its daily trading volume has collapsed by 70% since January, currently sitting at $4.6 billion. The decline in trading volume raises serious questions about Upbit's future. If new customer restrictions remain in place for an extended period, Upbit could lose its dominant position in the South Korean market to competitors that remain unaffected by regulatory scrutiny. Is this the end for Upbit, or will South Korean regulators soften their stance? U.S. authorities seized $31 million in crypto from uranium finance hack. But where's the rest? Shocking crypto crackdown. U.S. seizes $31 million tied to 2021 uranium finance heist. In a major development in the battle against crypto crime, U.S. authorities have seized $31 million worth of stolen cryptocurrency tied to the infamous 2021 uranium finance hack. But with $50 million originally stolen, victims are left wondering, where is the missing $19 million? Authorities crack down on uranium finance hackers. The U.S. Attorney's Office for the Southern District of New York and Homeland Security Investigations, HSI, in San Diego announced on February 24 that they successfully confiscated a portion of the stolen funds. Despite the breakthrough, authorities have not disclosed the identities of the hackers, leaving victims in the dark about who masterminded the attack. Officials have urged those affected by the breach to come forward and assist in ongoing investigations. Inside the uranium finance heist, a $50 million crypto nightmare. Uranium Finance, a BNB chain-based DeFi platform, was a fork of Uniswap that launched on April 1, 2021. However, just weeks later, on April 28, 2021, the protocol fell victim to a catastrophic exploit. One of the project's Discord administrators suggested at the time that the attack may have been an inside job. The hacker exploited a flaw in Uranium's V2 smart contract code, allowing them to artificially inflate the project's balance by a factor of 100, a vulnerability that ultimately led to $50 million in stolen assets. Where did the stolen crypto go? The attackers' loot included $36.8 million in BNB and Binance USD, BUSD, 80 Bitcoin, BTC, 1,800 Ether, ETH, 26,500 Polkad, DOT, 5.7 million Tether, USDT, 638,000 Cardano, ADA, 112,000 U92 tokens, Uranium's native token. To cover their tracks, the hacker converted the stolen Polkad and Cardano tokens into Ethereum before laundering the funds through Tornado Cash and moving them to centralized exchanges. The Uranium Finance disaster, a repeated attack. This was not the first attack on Uranium Finance. Just 3 weeks prior, on April 8, 2021, its V1 liquidity pool was exploited for $1.3 million. The project attempted to recover by launching a new version on April 16, but within 12 days, V2 was hacked for $50 million, delivering a fatal blow to the project. Will authorities recover the remaining $19 million, or are the stolen funds gone forever? Crypto market plunges into extreme fear as Trump confirms 25% tariffs on Canada and Mexico. In a move that has sent shockwaves through the cryptocurrency market, President Donald Trump announced that the United States will impose a 25% tariff on all imports from Canada and Mexico starting next week. This decision has escalated fears of a trade war, leading to a significant downturn in crypto market sentiment. The Crypto Fear and Greed Index, which measures market sentiment on a scale from 0 to 100, has plummeted to 25, indicating a state of extreme fear. This sharp decline reflects growing investor anxiety over the potential economic repercussions of the tariffs. Bitcoin, BTC, the leading cryptocurrency, has experienced a notable drop in value. Currently trading at $89,783, it has decreased by approximately 6.15% from the previous close. The intraday high reached $96,153, while the low touched $88,663. Similarly, Ethereum, ETH, has seen a decline, with its price now at $2,394.11, down about 11.59%. The day's high was $2,712.97, and the low was $2,336.93. The announcement came during a press conference with French President Emmanuel Macron, where President Trump stated that the tariffs are set to proceed as planned. This decision follows a temporary 30-day suspension after initial discussions with Canadian Prime Minister Justin Trudeau and Mexican President Claudia Sheinbaum. The tariffs aim to address concerns over undocumented migration and fentanyl trafficking into the United States. In response to the impending tariffs, both Canada and Mexico have expressed intentions to implement retaliatory measures. The Canadian government has announced plans to enhance border security, allocating $1.3 billion to deploy nearly 10,000 frontline workers and resources to curb the flow of fentanyl. Mexico has agreed to deploy 10,000 National Guard troops to its northern border to combat illegal drug trafficking and unauthorized immigration. The broader financial markets have also felt the impact of these developments. The S&P 500 has declined by 2.3% over the past 5 trading days, while the Nasdaq Composite has dropped by 4% in the same period. Economists warn that the tariffs could lead to increased prices for a wide range of consumer goods, including automobiles, electronics, and pharmaceuticals, as import costs rise. The cryptocurrency market sensitivity to geopolitical events has been evident in recent months. Analysts suggest that the current downturn may present buying opportunities for long-term investors, though caution is advised given the prevailing volatility. The interplay between global trade policies and digital asset valuations continues to be a focal point for market participants. How will President Trump's 25% tariffs on Canada and Mexico affect the future of the cryptocurrency market? Crypto in crisis. Bybit rushes to repay Bitget's 40,000 ETH loan after devastating $1.4 billion hack. Panic grips the crypto market as Bybit scrambles to recover from historic hack. The cryptocurrency world is in turmoil after Bybit suffered a catastrophic $1.4 billion hack on February 21st, with reports linking the attack to North Korea's notorious Lazarus Group. In an unprecedented move, Bybit acted swiftly, repaying a massive 40,000 ETH loan from Bitget within just 3 days to maintain liquidity and ensure user withdrawals remained unaffected. Bybit's rapid response to one of the biggest crypto heists in history. On February 21st, Bybit, one of the leading crypto exchanges, fell victim to a colossal cyber attack, making it one of the largest hacks in the history of cryptocurrency. Despite the severity of the breach, Bybit took immediate action, securing emergency funds to stabilize operations. According to blockchain analytics platform Chain, Bybit borrowed 40,000 Ether, worth approximately $104 million, from rival exchange Bitget to facilitate seamless withdrawals for users. This move came as investor confidence wavered and panic-induced withdrawals surged past $5 billion on February 22nd. Bitget's lifeline, a no-interest loan to save Bybit. In a rare display of industry solidarity, Bitget CEO Gracie Chun confirmed that the loan was issued without interest or collateral, stating, "No interest, no collateral. This was simply about supporting a peer in need. Great to see Bybit fully recovered, and we never doubted the return of the loan." On February 25th, on-chain data verified that Bybit had fully repaid the borrowed 40,000 ETH to Bitget. This repayment served as a crucial step in restoring investor trust and market stability. Bybit's bold recovery efforts, rebuilding lost funds. Bybit's recovery strategy involved accumulating approximately 446,870 ETH, $1.23 billion, through a mix of asset purchases, whale deposits, and loans. This accounted for nearly 88% of the total stolen assets. Despite the breach, Proof of Reserve auditor Hacken confirmed that Bybit's reserves still exceed its liabilities, reassuring users that all funds remain backed. However, The broader crypto market reacted negatively, with Ethereum, ETH, plummeting over 7% within hours of the hack. ETH dropped from $2,831 to $2,629 and was trading at $2,473 at the time of writing, according to CoinGecko data. Lazarus Group strikes again. Is this just the beginning? Crypto investigator ZachXBT identified North Korea's Lazarus Group as the likely culprits behind the Bybit hack. His research earned him a bounty of 50,000 ARKM tokens. Further analysis suggests possible links between this attack and previous exploits on BingX and Femex, raising concerns over Lazarus Group's growing threat to the crypto industry. Security experts warn that the stolen funds may be laundered through cryptocurrency mixing services to obscure transaction trails, an infamous tactic used by the hacking group. The industry remains on high alert as investigations continue. Will the crypto market ever recover from this attack?